Brings to business news now on the programme, and the European Union has been pretty busy, in fact, finalising a number of trade deals, one of them with Vietnam. We're going to look at that in our business bulletin, and Catherine Bennett is here with a lot more for us.
Good morning, and that's absolutely right. So the EU and Vietnam signed a milestone agreement that slashes almost all tariffs on EU imports from Vietnam. And this is another show of unity between trading blocs in defiance of mounting global protectionism. Here's what the EU's Trade Commissioner had to say on the deal.
This free trade agreement eliminates nearly all tariffs on goods, over 99%, with the 1% partially liberalised through quotas. It is reducing costs, red tape for business, and this is particularly important for small business.
Now, Vietnam has actually done quite well out of the US-China trade war, as some companies have moved production lines there from China. It's a country that relies heavily on its exports to the US and the EU, and this deal could see those jump by over 40% by 2025. The EU also finalised a trade treaty with Mercosur on Friday that took 20 years to complete. It's been hailed as historic and could be the EU's most lucrative trade deal ever. But not everyone is happy. Shirley Sitbon has the story.
Philippe Dufour has 90 cows on his farm. He believes in high-quality farming. That's why the EU-Mercosur deal worries him and other farmers across Europe. The agreement will allow South American farmers to export beef, although they don't abide by the same EU standards.
This pressure and unfair competition over meat imports will destroy agriculture circuits as we know them. If their products, which cost less to produce, start flooding the market, I don't see how our small farms can survive.
The deal allows Mercosur countries to export 99,000 tons of beef to the EU every year at a preferential rate, as well as poultry and sugar. In exchange, Mercosur countries will slash customs duties on European cars, chemicals, and various industrial exports. The deal creates a market of up to 780 million consumers. President Emmanuel Macron tried to reassure those consumers about quality standards and to convince those opposed to the deal.
The deal is currently good because our requests have been taken into account.
The deal has yet to be approved by regional and national parliaments on both sides and by the European Parliament.
US President Donald Trump struck a more open tone when talking about Chinese telecoms company Huawei after his meeting with Xi Jinping on Saturday. Rolling back a month-long blanket ban, he said that US companies could sell Huawei equipment that did not pose a national security risk. However, Larry Kudlow, the White House economic advisor, told Fox News on Sunday that this didn't mean that Huawei was entirely off the hook. It's still on the US blacklist. But the Commerce Department is willing to grant more licenses to US companies wanting to deal with the tech firm. And Chinese tourists aren't digging as deep into their pockets as they used to. Hit by the global trade war, poor growth at home, and a weakening currency, new figures show that Chinese tourists spent 10% less outside the country in the first quarter than they did in the same period last year. Many Chinese are now travelling more within China or choosing cheaper travel options. Now, that's bad news for the rest of the world, as Chinese tourists account for about a fifth of total tourism spending worldwide. Now let's take a look at the markets. Major European markets open today, seeing a surge after this pause in the trade war, with the FTSE and the CAC 40 up over 1%. Frankfurt's DAX, however, making the biggest moves, climbing almost 2%. Indices in Asia, unsurprisingly, also got a boost, with mainland Chinese shares pushing up over 2%. The Nikkei jumped over 2% as well, while the Kospi stayed on the flat line. The Hang Seng Index is closed today for a holiday. South Korea's exports have posted the largest drop in almost 3.5 years in June. Exports fell 13.5% year-on-year. Imports were also hit, dropping 11.1%. It's the same across the region, as Asian countries have struggled to deal with the US-China trade war. A regional manufacturing PMI fell back into contraction in June, reaching a 4-month low. The Organisation of the Petroleum Exporting Countries, or OPEC, is due to meet in Vienna today. OPEC is set to extend oil output cuts in an effort to keep boosting prices. On Monday, Iran called for unity amongst OPEC's members, hitting back at what it sees as too close cooperation between Saudi Arabia and the United States. Oil prices rose ahead of the meeting. Brent crude rose over 2.5% to $66.45 a barrel, while WTI climbed to $59.97 a barrel. And we'll keep you updated with more on oil prices over the course of the morning.
Thanks very much, Catherine. Catherine Bennett there with the business news on France 24. Over this